Hey there, everyone. What is a capital call as it pertains to passive investments and how you should handle them? And that's what we're going to talk about in today's video. Let's go. Hey there, everyone. I'm Dr. Jonny Walker, aka Dr. Jonny Withananchi. Welcome back to the channel. All right, guys, before we get into today's video, I want to talk a little bit about the Passive Investing for Dentists Summit. It's going down in August 16, 2024 in Dallas, Texas. If you haven't registered, click on the description below. There's a link. You can click on the link and get your ticket before they're gone. At the time of recording for this video, there's only 18 tickets left. And once they're sold out, we're done for this year. Better luck next year. Again, it's going down in Dallas, Texas, August 16th. I hope to see you there. All right, guys, let's get into today's topic then. So what exactly is a capital call? A capital call in syndicated real estate investments refers to a request made by the managing entity, the sponsor, to the limited partner or the investors for additional funds beyond their initial capital contribution. So that means that the sponsor, the guy that's running the deal in a passive investment, they say, hey, not only have you already invested your capital, but we need additional funds. These requests typically happen when an investment, a project, requires more capital in order to achieve its objectives. This capital could be used for funding property acquisitions, for renovations, for construction, for execution of the business plan, or unexpected expenses. Especially in today's environment, what's really causing a lot of distress and requiring more capital in deals is floating rate debt. A lot of people in 2020, 2021 have bought investment properties with floating rate mortgages. That means the mortgage is variable. It's fixed for a short time, like say 3 years. After 3 years, the interest rate will adjust to whatever the prevailing market interest rate is. So now the thing is, in properties in 2020, 2021, were bought at 3%, 4% interest. Now they're seeing those interest rates jump to 7 and 8%. And all of a sudden, they don't have enough cash flow to cover the mortgage payment. So that is a source of, hey, we need some capital in order to help us pay the mortgage until interest rates come down. To me, this is a very bad plan. This might be just throwing good money after the bad, right? Because it's like, hey, look, we need more money just to make interest payments because we know that interest rates are going to go down at the end of 2024. Well, guess what? At the beginning of the year, they said we're going to get 6 rate cuts. Now we're into July, and they're saying we might not get any rate cuts this year. Now what's going to happen is that they're going to have to do another capital call and ask for even more money. Hey, give us some more money so that we can make our payments until interest rates go down, or we lose the entire deal. Other examples, rate caps. A lot of lenders will require not only that you get a new when your mortgage will reset, they're going to also ask you to escrow more capital in order to buy what's called a rate cap. Rate cap is a big expensive item, especially now when cost of rate caps have come down in the recent past. But they still remain very high compared to historical averages. And as a result, that big chunk of money, we might require a capital call. Hey, we need more money to fund this rate cap that the lender is now requiring from us. Now, these are just a couple more examples of when a capital call is used. And I'm using these examples because most of our investors are doctors, dentists. We know dentists, and in many deals, thank God, knock on wood, none of our deals have had any capital calls, but many deals have had capital calls, right? And we're seeing dentists stuck in a position where they've already put 100 grand and they have somebody else, a sponsor saying, hey, we need every investor to chip in another $25,000. Otherwise, this deal fails. Now, the doctor is shocked. Like, I had no idea this could happen, and now am I going to lose my entire 100,000? Should I put in this 25,000? Are the other people going to put 25,000 if I do it? And all of a sudden, it's this big, huge problem. Now, are capital calls always a bad sign? Well, not necessarily, because there are times that once maybe a sponsor needs capital in order to execute something, to get a rate cap in place, whatever it is, but after that, they're in otherwise pretty good sound footing. They're executing, they're renovating units, for example, they're driving incomes, and they're executing their way into the black, right? Into profitability. And so capital call there might make sense because it allows a managing entity to effectively manage the financial needs of the investment throughout its life cycle. And this allows investors opportunity to get returns. So what happens if an investor doesn't have the funds? Hey, I gave you my 100 grand and then that's kind of all the investment money I have for the next year or so until I save up more money. So you're asking me for another 25 grand, but I don't have any capital. What happens then? I don't even if I wanted to give it to you, Mr. Sponsor, I don't have that kind of money to give you right now. Well, what would happen to that investor? An investor doesn't have the funds available when a sponsor issues a capital call. It could potentially lead to various circumstances, depending on the terms outlined in the partnership agreement that you sign at the beginning of the investment. One, it could be penalties and interest. The partnership agreement may specify penalties or interest charges for late contributions. Number 2, default. Failure to meet capital call may result in investor being considered in default of their obligations under the partnership agreement. This could have serious consequences, including forfeiture of ownership, meaning, hey, look, you no longer own the shares if you don't make this tangible contribution. Again, it comes down to the terms outlined in the agreement. Not all capital calls are done the same. Number 3, dilution of ownership. Hey, look, if you're not going to invest the capital, we're going to open it up and we're going to bring in other potential investors to save this deal, and we're going to dilute your share. So your investment, now the amount of property and percentage of profit that you're going to get from this deal becomes less, because now you have to share it with these other new investors that come in. So that is a potential, right? Number 4, legal action. This is pretty rare, unlikely, but it's not impossible. A sponsor or general partner could look to take legal action against you, the limited partner investor, saying, hey, look, it's been outlined in the terms of this agreement that in the event of a capital call, they must provide the capital. And if you're not doing it, they could seek the court to compel the investor to, hey, pony up their money. So these are some of the potential consequences of not participating in the capital call. We talked about the risks of participating in the capital call. You risk that, hey, maybe this entire deal is going to be lost and you're going to lose even more money, or you're going to save the deal. That is going to depend on the circumstance. In order to avoid the pitfalls of, hey, if you make a capital call and you don't do it and all the stuff we talked about, this is why it is paramount during your due diligence of investments of this kind in passive investment that you need to examine what their philosophy, what their role, what they want investors to do in the circumstance that a capital call comes to play. So again, I know I talk about this in almost every video, but this tells you the importance of due diligence in all passive investments. Anyway, that's all I have for today. I hope you understand what a capital call is, how to avoid them, and most importantly, how to get on the right side of them by examining exactly what that philosophy is, what the procedure happens in the event of a capital call by doing the due diligence beforehand. All right, guys, I'll see you on the next video. Keep the information growing. Keep your bank accounts flowing. I'm Dr. Jonny Walker. Peace.